Welcome back to Professional Insights brought to you by the National Referral Network. And if you are a business owner with a federal tax liability of over $1 million, then you need to listen to this interview because today we're going to dive into the world of renewable energy tax credits, what that means, and how it's a powerful tool that can help you as a business owner reduce some of those tax burdens and meet some environmental goals at the same time. So today I have Tua. He's going to pronounce his last name, but he's a business development executive with B10 Energy, one of the leading names in renewable energy tax credits. But before we get going, make sure to hit that like and subscribe button. Leave your comments below so we can get those answered. If you have all the contact information for Tua as well. But without any further ado, let's bring Tua in. Hey, Tua, what's happening?
Hey, Mike, good to see you, man.
Good to see you. Hey, I know we talked about this before we got on. Pronunciation of your last name.
Yeah, pronunciation is Toiaivao.
Awesome. And where is that from?
So that's a Samoan.
I love it.
Name. Yeah.
I love it. Okay. So let's get into the basics to get this thing going. Basic overview of what renewable energy tax credits are. I didn't know, and I know a lot of the viewers don't know as well. So what are they? How do they work?
Yeah, great question. So in a nutshell, what it is, these are renewable energy projects that are built and qualified within the IRS that qualify for the ITC, so the tax credit, right? And every time there's a project built, there's a tax credit that's generated, and that tax credit as of 2022, 2023 was the first year they were able to be transferred, can now be transferred to any buyer that needs help with their federal tax liability.
Okay. So you and I spoke about this at the beginning. We might go off on a tangent. This is one of those tangents. So the first, what qualifies as a renewable energy product or project that qualifies for this tax credit?
Yeah, great question. So there's lots of different types of projects, right? And they all fall within their own specific codes inside the IRS. So you have everything from wind farms to battery manufacturing to solar projects to anything that falls within the IRS's definition of a renewable energy project is eligible for that. And at B10, we focus on the solar side of it.
Okay, so you mentioned 2023, this transfer. So the credits, how long have the credits been around?
Yeah, the credits have been around for quite some time, right? And the IRA Act of 2022 was really the first time that allowed these credits to be transferred. So what that means is now these credits can be sold on an open market. And last year being the first year they could be sold, you had all of the institutional buyers, right? The big banks that are out there. I mean, out of the $8 billion that were in credits that were available, they bought up, I think, 95% of those credits, right? And so what that's done is really opened the door for renewable energy project developers to now go out and find additional funding for their projects via these credits.
So who owns the credits?
Good question. So at B10, we effectively own the project and the credit. So
okay, so real quick, so what does that mean? So are you guys building solar farms?
Great question. So we've got developer partners that we work with, right? And the developers, they've been vetted. They've got a tried and true process. They've got a good history. And whenever that project gets close to completion, we come in and we actually buy the project from the developer. So before it goes into service, so that's a key part. You have to buy it before it goes into service. And once it goes into service, now we become the effective owners of the credit and can therefore transfer and sell the credits on the open market.
So I understand the money side of it in terms of, look, if you have a credit and you sell those, it's a potential revenue stream. But is the full intention on owning these types of clean energy projects is to sell the tax credits? Is that the purpose?
For us, it is, yeah.
Okay.
So our model is, one thing unique about us is the fact that we do own the credits. Most of the credits that are out there, they're being brokered. And we'll still do some brokering, but when you're a broker, it's a little bit more difficult to offer transparency to the buyer of the credit, and to have control over the project as well. So you're kind of in the middle of like, okay, how do I make sure that the project is flowing right, make sure that the project is getting done timely, and then still offer transparency to the buyer of the credit as well, for validation and transparency, things like that, right?
Yeah. So with transparency to it, let's be clear on this one as well. You guys, B10 owns the energy credits, but you guys are not CPAs. You guys aren't attorneys. You don't actually file the tax or do the tax prep for these clients of yours, correct?
So yes and no. So
Okay.
we've got an army of CPAs, attorneys,
Awesome.
tax professionals on our side in-house.
Okay.
And then the other question to to the prep and file is no, we don't do any of the prep and file work.
Gotcha.
Right. So
Okay.
our job is really on the diligence side of making sure that everything gets done properly. And then we hand that over to the client CPA and their team for the file.
So this is one of the reasons, and I've said this quite a bit on these interviews, is there's so much that I don't know. And I've been in the financial services industry since 2011, and it doesn't mean I should know everything, but this is the valuable part of these conversations. And so if I'm looking on a business standpoint, what should a business owner with that tax liability of at least $1 million, why would they be interested in this?
Yeah, well, first of all, usually if somebody's got $1 million tax liability annually, they're paying quarterlies to the IRS.
Okay.
Right. So they're forecasting, they understand and they know what their tax bill is typically going to be. Right. And so by utilizing these credits, the easiest way to put it is the way the credits work is, when you go to Costco and you see the gift cards on the rack, right? For Fleming's or Ruth's Chris or whatever, it says, hey, you pay $80, but you get $100 worth of steak, right? And then you could use it anytime you want. That's really how these credits work, right? So for a business owner saying, hey, I've got, $400,000 worth of my quarterly coming up. Okay, how do I offset that, right?
Okay.
Well, with the IRS, you can offset up to 75% of that with these tax credits. So so that means that's $300,000. Okay. Well, if you could offset $300,000 with $250,000, that was the outlay for the credit. Okay. Well, now that's an immediate return every quarter on your money.
So let's do the math real quick, because I want to be clear.
Yeah.
And I appreciate the analogy of the Costco cards because I look at those all the time. So for simple math, you have $500,000 in tax liability, and you're saying that you basically spend 75% of that 500,000, and that kind of eliminates the total burden.
So let me back up. So you can offset up to 75% of that $500,000 with the tax credit, right? And then there's a discount. So tax credits right now typically will be transferred or sold for 85 to 95 cents on the dollar. The earlier in the year that they want to buy the credit, the cheaper it is.
Okay. It's kind of a supply and demand.
Correct.
Okay. Interesting. So what are some of the misconceptions that business owners might have about tax credits like this?
I think the biggest misconception that I've run into is when you first initially talk about the renewable energy tax credits, the client or the CPA will say, well, I don't have any renewable energy clients. And like, oh, okay, because there's this association with, it's got to be, I don't have any, solar on my house or on my building. I can't use these. And that's really the biggest one, because these credits, they're really general business credits. So you can apply them. Any C Corp can use them, and it can be applied towards any passive income entity as well.
Interesting. And you mentioned you guys do solar, and obviously, I'm assuming that there are other projects available. If a business owner is looking at one of these opportunities, what should they consider when selecting, say, a solar versus wind farm, whatever case? Like, how do they evaluate those?
I think it's less about the project and more about the developer and whoever owns the credits, right? Are they trustworthy? Do they have a track record? Can they be vetted, thoroughly, right, with that? And, it's a lot like, going to a mechanic, right? You go to a mechanic that you trust, they've got a great, reputation from somebody that sent them to you, right?
Yeah.
And so when it comes to the credits, it's less about the project and it's more about, okay, who is the developer? Who are the owners of the credit? How do these get transferred? Vetting the process in between. Because at the end of the day, it's really a financial decision for the buyer.
But two of that, and I pick on CPAs quite a bit because, right, a lot of people put CPAs on this pedestal and really they do a phenomenal job in what they do. But as a business owner who's not getting those details from a CPA, that is not getting, say, a referral to, say, B10,
Yeah.
how does someone look at you, compare them to somebody else when they don't even know really how to evaluate the process and say this option A is better than option B?
Yeah, good question. So, I think every CPA should have like a tax advisor network that they trust,
Mm-hmm.
right? Somebody that they can go to and say, hey, what do you think about this? You did this for that client, take a look at this. I think that's where we come in as well. We fully recognize the importance of the CPA to the client. And, in all truth to the matter is we have no desire to be the hero in front of the client. Like, we don't do any of the prep and file. That's not our mojo. That's not what we do. We stick to this particular strategy. And our job is to really make the CPA look like $1 million and hopefully save the client $1 million
Right.
at the same time. Right. So.
Yeah, and I think you bring up a great point, and I'm going to ask you this, and it's going to be, you just kind of alluded to it, but how important is it for business owners to have the whole team working together so they have a clear vision of what, say, projects like this even are offering to them? Because it might not be a right fit, right?
Yep.
But how important is it to have that team around them?
Oh, it's vital. It's absolutely vital. You have your primary physician that you go to if you're sick,
Okay.
right? But let's say your left shoulder is hurting really bad. Well, that primary physician isn't going to operate on you. He's going to say, hey, I need you to go talk to Dr. Smith. He's a orthopedic surgeon, works on shoulders, right? And he can specify and figure out and get that thing fixed for you, right? So now you've got this team of doctors around you. Same in business, right? You've got to have that team. Vitally important.
Awesome. So let's jump into kind of the regulatory legal side of it, because I know I have questions on this side, and I'm sure the viewers will as well. So talk to us a little bit about the legal and regulatory requirements kind of surrounding some of these tax credits. What does a business owner need to do?
Yeah, great question. So let me kind of back up a little bit in terms of the renewable energy project. So
Okay.
when everybody thinks of renewable energy projects, they think of these large mega solar farms, right?
Okay.
These 500 megawatt deals out in the middle of a field, or huge, like those take years to build, years to get into service, right? Well worth it. And when you do that, according to the IRS, you have to abide by, one of the things is prevailing wage and apprenticeship, right?
Okay.
Making sure that everybody's getting paid properly and stuff like that. At B10, we've decided to focus on the smaller projects, because what we found is there's a niche for tax credits under $3 million
Okay.
that business owners want, right? And that's our mojo. So every project that we build is under a megawatt. And if you're under a megawatt, then you're not having to go through all the red tape of the PWA, the prevailing wage, regulatory stuff. Everything else inside of that is vetted and confirmed with the developer as well. So we make sure all the ducks are in a row when it comes to those projects.
And so you mentioned the IRS. How does the IRS verify or audit these renewable tax credits to protect the business owner from making potentially a poor decision?
Correct. So whenever there's a project being built, that developer has to file with the IRS. I forget the form. It's an 80 something, right?
Right.
But they put a project number. They're assigned a project number for that particular project. So when that project goes into service, now the credit is established, and the buyer will fill out their form, and they'll tag that same project number, and that's how the IRS matches it up.
Are there any risks to that, Tua? Like
Are
risk
there
to the whole process
risks to the whole process? So
on the
you know,
business owner standpoint? So maybe,
yeah,
I mean, obviously there's the downside of the project that might
yeah.
not be able to whatever, but in terms of the business owner, are there any risks to them?
The risk to them would be just making sure that you're associating yourself and committing to a proper tax advisor project, all the things that are vetted and verified with that. I wouldn't just, go to your buddy and say, "Hey, can you build me a solar project?" Like, you could maybe, right? But
Right.
that's not the direction I would go. So just make sure you have all the right people on your side.
There there are a lot of tax credits in the IRS code that a lot of people are unaware of
Mm.
that are outside of your guys' specialty. How do tax credits vary across your guys' industry? Meaning, is solar a different tax credit than wind, than hydro? Are there different levels of tax credits?
There are. So there's
Okay.
every renewable energy project falls underneath their own kind of silo, if you will, right? So the battery manufacturing is different from our solar.
Okay.
It's different from the wind turbines, right? So you have to make sure all your ducks in a row, right? They're labeled 45X, 45C, all that stuff.
Are there any benefits? Like, are there other of those sectors, are there ones more particularly beneficial for business owners? Like, if they go batteries, or is there, instead of 75%, is it 100%?
It's, yes and no, right? It's kind of a
Okay.
loaded question, right? So, because again, it just goes back to the business owner. So, if I have a business owner and he's a, big manufacturer of things, right? He's looking at his liability. His CFO is saying, "Hey, man, we've got $1.5 million in liability this year, right? We're expected to go to, almost $2 million next year." It's really a financial decision,
Okay.
right? So, yeah.
Can you do a battery and solar?
Can you do multiple projects? A
Yeah.
good question. I don't know. I haven't seen where you can do multiple credits.
I mean, to me, I mean, initially it sounds kind of complicated, but I'm sure somebody would ask, right?
Yeah.
Can I
Yeah.
do
Yeah.
multiple? So there's obviously, we just, in this politics aside, we just had a very, very big election season. Looking ahead, do you see any trends in the renewable energy tax credits that could affect the tax credits? Have you heard anything?
Not heard anything. I don't think they're going away, right?
Okay.
Simply because now the big bank institutions, they love these credits, and they've got a very strong lobbying, right?
And right, it's the,
So
the old analogy, follow the money.
follow the money, right? So, if you're paying, $5 billion a year in tax liability, and you only have to pay actually, 4 billion for the credit, right? Well, there's some incentive to keep that thing around, right?
There is some incentive. So, and then on the flip side of that, are there any new developments business owners should watch for moving forward?
Yeah, you're going to see a lot of new renewable energy tax credit brokers, platforms pop up. Make sure you're vetting them. You're getting all the good details on it. You're asking around before committing to something. Somebody with a great reputation, that's probably a good sign. Yeah, so those are the things that I would look out for. If it's a guy locally down the street, that's got a new business, fancy website. I actually had somebody call me on that. He said, "Yeah, I'm doing this, and I've got residential." As soon as he said residential, I thought, well, that doesn't apply to us. I don't know how we would do that. But just being very careful. There's going to be a lot of players coming into the marketplace.
And I think that's a good reminder too, because you've got the employee retention tax credit, you've got the R&D tax credit. A lot of these other tax credits are being promoted on social media from marketing companies. They don't actually fulfill or provide that guidance. They're really just a marketing firm. So I think that's a great point that you make in terms of, do your due diligence on a firm. And I don't think you can do 100% due diligence on anybody, but they certainly should get to the level that they feel comfortable making a decision, right?
Yeah.
And so
Correct.
with that, as we wrap up, and that was a huge piece of advice there too, and I appreciate that. But as we wrap up, what other advice would you give to business owners who want to start this journey, but just don't know where to start or how to have that conversation effectively?
Yeah, I think you start with your CFO, your CPA,
Okay.
right? And just sitting down at the table and saying, listen, we paid a lot in taxes. I've heard about this. Can you guys help me verify and do some diligence on this particular tax credit and how it might apply to us, right? Because I think it could work. I think going back to the beginning conversation, making sure you have the right team around you
Right.
is crucial, man. Like,
Now, to and didn't mean to cut you off there, and this might be kind of one of these loaded questions to you. You're a business owner. You go to your CPA, right? Maybe that business owner may or may not have a CFO, but he goes to a CPA, and the CPA says those things throw up red flags in the IRS and cause audits. What is a business owner, in your opinion, what does a business owner do in that situation?
yeah. So from a CPA's perspective, I can totally see why they might say that, because a CPA spends their life, they're building their clientele and they've done a great job. They want to keep that clientele. So sometimes when a business owner brings up a tax strategy, the CPA's initial reaction, and if I was a CPA, I might feel the same way too, is like, oh, somebody's trying to take my business.
Right.
Right. But that's not the case, right? A business owner should say, hey, what kind of tax advisors do you know any tax advisors that can help us due diligence on these particular credits?
Right. And the
Right.
key word would be us.
Correct.
Right.
Yeah. It's got to be a teamwork, right?
Yeah.
I get a little frustrated sometimes if a business owner says, oh, my CPA nixed it. Or my CPA, or the CPA doesn't want to call back. Like, okay,
Right.
I get it. Maybe they've been together 40 years, 30 years, or whatever it is, right? Like they've got that friendship. They go fishing, they go hunting, they go do whatever together, right?
Yep.
They're buddies. At the end of the day, though, the business of the business is to be profitable
100%.
and to make money, right? And our role in that business is to help that CPA with additional strategies they may not even know about, right? And then make that CPA look good in front of their clients. Because the better our CPAs look in front of their clients, the better we do, right?
One to it. That's a great point, because I mean the whole idea of the National Referral Network and these interviews, to be honest with you, is to pull the data, pull the information from your brain to provide to other partners in the network, so they have a professional that they know somewhat. We bridge some gap of trust, but that we're all collectively trying to work for the benefit of the business owner.
Yeah.
Right. It's one of those things that I always mess this quote up, but a rising tide raises all ships. Ooh, I got it. Nice.
Yeah, there
Right?
you go.
Yes. Gold star for the day. So Tua, thank you so much for the time. I know you're busy, but I really do appreciate it. For those that are watching, Tua's information will be in the description, the link to the website. Any question you have, leave it in the comments. I'll make sure to get it to Tua and the team. If you're a CPA, I'm happy to make the introduction. Let us know how we can help. Hit that like and subscribe button. Tua, thank you. I really appreciate the time.
Thank you, Mike. Happy to be on.